Welcome to the International Accounting. First time joining the program, remember to subscribe to the channel, like, share with everyone. Today we share with you lesson about payment plan. Now, let's get started. Principle of balancing with payment plan. Beginning cash plus collection plan minus payment plan equals ending cash. So we determine items such as beginning cash, collection plan, we will have the total cash the business has in a period. Then use this amount to pay or invest. 1. Beginning cash includes cash on hand and cash in bank. Suppose cash on hand is $1,000. Cash in bank is $9,000. So beginning cash equals $1,000 plus $9,000 equals $10,000. 2. The collection plan includes the collection of previous period's debt and the collection of this period's money. The previous period's debt collection plan depends on the sales contract, the debt notice and the previous period's debt that the customer paid in this period. For example, on February 20, 2025, Company A sold goods to Company B with a revenue of $3,000. Company B paid $1,500. The remaining amount was paid in 3 installments on March 20, 2025, April 2025, May 2025 with the amount of $500. The collection plan for Company A in March is $500. Collection money this period includes sales, goods, services, other, liquidation, tool, machines, expired, damaged, bank, loan, interest, government, return taxes, insurance subsidy, sales, goods, services, other, depending on the situation of selling goods and services of the enterprise, based on contracts, invoices, debt notices, the enterprise sells on credit or collects money immediately. For example, in March 2025, Company A sold a batch of goods to Company B has sales of $10,000. According to Company A's policy, Company B can owe 30% of total revenue. So, in March, Company A will receive $7,000 from the sale of goods. In March 2025, Company A plans to liquidate a damaged machine, expected to earn $2,000. So, the net revenue from liquidation of Company A is $2,000. In February 2025, Company A prepares to add a source of capital to buy raw materials for production. The company applies for a loan from Bank C for $12,000 and is approved by the bank. This amount is disbursed in 3 installments. March 2025 is $4,000, June 2025 is $4,000, September 2025 is $4,000. So the amount of money Company A receives from the loan in March 2025 is $4,000, with the above amount of interest on deposits received is $10. So the total amount of loan and interest on deposits, Company A will receive $4,010. In March 2025, the company did not file a claim for a tax refund from the government, nor did it receive any Social Security benefits. Therefore, the amount received from the government is $0. Total collection money in March 2025 including previous period debt collection and collection in the same period is $500, previous period, plus $7,000, sale, plus $2,000, liquidation, plus $4,010. Bank, loan, interest, plus $0, government, taxes, insurance, equals $13,510. The purpose of today's program is to talk about payment or spending plans. Payment must depend on the current amount of money in the plan. Sometimes when the cash flow is not enough, the business is forced to pay the necessary debt and can postpone the debt to the next period. Payments include pay within the period, debt paid this period. Pay within the period means that these payments are not owed by the business and are paid periodically, mainly for fixed periodic services such as electricity, telephone, internet, depending on the contract. In addition, payments for business operations include gasoline, road tickets, periodic office supplies, cleaning services for factories and offices, minor repair costs, other expenses such as drinking water, flowers and entertainment costs. Let's assume that these expenses total $200. Debt paid this period includes supplier, goods, services, other, $4,000, employees, salary, allowances, bonus, $1,400, bank, loans, interest, $400, government, taxes, insurance, $200. Debt to suppliers includes raw materials, accessories, tools, goods, equipment, machinery. Services for business activities such as consulting fees, accounting services, lawyers, car rental, factory rental, office rental, transportation. These amounts are based on contracts, invoices, and debt notices. We must select payments in this period, March 2025. Salary, allowances, and bonuses are payments that must be made periodically, monthly, to employees and are based on contracts and contract appendices, depending on the expansion. Contraction policy of the business, we can add or subtract the salary to be paid to employees. If a business needs to borrow money, it must prepare a plan to repay debt and interest. Based on the credit contract, we can calculate the debt and interest payable during the planning period. In the planning period, if the enterprise has to pay taxes to the government, it must estimate the amount of tax to be paid in the planning period to avoid late tax payment and also plan to pay insurance to the government. So, ending cash equals $10,000 plus $13,510 minus $6,200 equals $17,310. This is a summary table of a business's payment plan. Looking at the table, we have the following columns: contents, collection plan, payment plan, balance cash. Corresponding to the rows: beginning cash, 10,000, 10,000. Customer, 7,000, 17,000. Interest, 10, minus 50, 16,960. Loan, 4,000, minus 350, 20,610. Supplies, minus 4,000, 16,610. Employee, minus 1,400, 15,210. Government, minus 200, 15,010. Liquidation, 2,000, 17,010. Old debt, 500, minus 200, 17,310. Total, 23,510, minus 6,200, 17,310. In the balance cash column, 17,000 equals 10,000 plus 7,000 minus 0. Similarly, 16,960 equals 17,000 plus 10 to 50. This is a detailed table of a business's payment plan. In this table there are the following columns: code, department, item, previous period, plan. Corresponding to the lines: beginning cash, revenue, total revenue, expenditure of the manufacture department. The items column will list in detail the business's revenues and expenditures. In the previous period column lists the actual revenue and expenditure of the previous period. The plan column is the planned revenue and expenditure column for the next period. Next is the sales department. Next is the management department. In addition, there is the other department operating. The last line end of period includes beginning cash plus total revenue minus total expenditure. Note that the data in this line in the previous period column is used as the beginning cash line in the FAN column. Taking the actual in the previous period compared to the plan helps us see the cash flow fluctuations in the future. Hope this video will help you in your studies as well as your work. Thank you for watching our channel. See you again in the next video.